To suggest that some see Tesla as the king of the electric vehicle world would be an understatement, and many believe Tesla still has a long way to go. Notorious for being downright controversial, the leading electric vehicle brand seems to have as many skeptics as it has supporters. We're very pro-Tesla on this channel, and today we'll be covering why we think Tesla has a very bright future ahead of it. As Elon prepares to release his third master plan for the brand, we'll be reflecting on the second master plan and what the future holds. How big will Tesla become? What are the statistics to support this? Will the brand achieve its goals? Let's find out. Analyst Gary Black believes Tesla's market valuation might reach $4 trillion by 2030. The computations of Black and his firm, the Future Fund, were just published, and these projections are highly upbeat and assume widespread adoption of the electric vehicles around the world. Going by Black's estimates, by 2030, electric vehicles will be more prevalent, with 60% penetration. Tesla, which presently leads this booming industry, will expand its advantage with a market share of 21%. According to Black, the corporation's production and delivery will also skyrocket. Global electric car sales are expected to reach 85 million units per year, with Tesla selling 10 million of them. As stated by Black, the automaker's adjusted earnings per share would rise from $6.79 to $100 in less than 10 years, and Tesla's operating margin will increase from 14.1% to 26.1% in 2030, thanks to advancements in battery technology in particular. While skeptics might react with pessimistic responses and evaluations, it's important to note that Tesla's long-term growth will come from more than just selling electric vehicles. The corporation has established itself as a disruptor, and it will be able to maintain that image in the coming years as it has quite several other possible growth opportunities. We also believe the firm may be worth trillions by 2030. Why? Let's take a look at CEO Elon Musk's second master plan for Tesla, posted on the company's website in 2016. Tesla's main goals were to build solar roofs, expand the electric vehicle product range to address all major segments, develop self-driving technology that is 10 times safer, and allow your car to produce money for you while you aren't using it. While it's true that Tesla fell short of its master plan, it's worth noticing that the first item on Musk's new master plan has nothing to do with automobiles. It's all about solar panels on the roofs and battery storage. Because Tesla isn't just a car company, people say things like Tesla is valued significantly more than the other automotive firms. If anything, Tesla is more of a tech company and has established itself as such with its culture of constant innovation. A large portion of Tesla's concentration is on energy goods, which Elon Musk believes may one day be worth as much as, if not more than, their whole automobile business. In 2020, Tesla's Gigafactory was manufacturing roughly 1,000 solar roofs each week, and 40% of individuals who bought a solar roof also bought at least one Powerwall, increasing their customer lifetime value even further. Also, while Tesla creates smart cars, their most important product may be the machine that builds the machine, their Gigafactories. While they were stuck in production hell during the Model 3 ramp-up a few years ago, their China Gigafactory was built and completely operational within a year of breaking ground. The best aspect was that the China facility was 65% less expensive per unit of capacity, resulting in substantially larger profit margins for automobiles produced there. Giga Berlin followed a similar path. It was constructed in little over 2 years, which shocked German officials and commentators. The speed at which Tesla developed the facility in a country known for its strict bureaucracy and careful planning was discussed during the inaugural address. After all, the factory is only a few kilometers from Berlin's new airport, which opened 2 years ago after nearly a decade of delays. Tesla has arguably only achieved one of the objectives in its second master plan, solar roofs. However, the company seems to be making significant progress on other fronts as well. First and foremost, the business is constantly working to improve its autopilot and full self-driving capabilities. Tesla held an AI Day event in August 2021 to attract the top AI talent. Experts believe Tesla's ability to lead on the full self-driving front hinges on its ability to attract top talent. Several manufacturers and technology firms are attempting to make self-driving cars a reality, and the majority of them have the financial means to do it. The winner may well be determined by technological prowess. Tesla is also boosting the number of people that can participate in FSD beta testing. Secondly, Tesla has continued to develop car software and battery packs to maintain its lead in electric vehicles and full self-driving. Panasonic, its battery technology and production partner, will establish a factory in Japan next year. This can only be beneficial for the company in terms of manufacturing and deliveries. When looking at the production and sales timelines, a pattern emerges right away. Global sales topped 250,000 units in September 2017, and Tesla built its 300,000th vehicle in February 2018. Tesla's global sales topped 500,000 units in December 2018, and vehicle sales grew by 50% in 2019 from 245,240 to 367,849 units. On March 9, 2020, the company produced its 1 millionth electric vehicle, and Tesla became the first car maker to sell 2 million electric vehicles in September 2021. By the end of 2021, Tesla's global sales had surpassed 2.3 million units since 2012. In addition, Tesla has now commenced delivery of the Model Y from its Berlin auto facility. The plant has the capacity to produce 500,000 automobiles per year, and it will eventually manufacture the majority of Tesla's automobiles for European buyers. Tesla is clearly achieving new benchmarks and surpassing its own performance. According to billionaire investor Ron Barron, Tesla might be worth trillions by 2030. Ron Barron has said he believes in Tesla not only because of its financial strategy, but also because of its approach to innovation. They're innovating at the speed of light, Barron explained. They're doing the same thing with cars, and now they're doing it with space. He's entirely correct. What sets Tesla apart from the competition? We believe it is, among other things, Tesla's willingness to constantly innovate. So, to the question on every investor's mind, what's in store for Tesla stock? Taking a look at Tesla stock, it's been a tumultuous ride. Since the beginning of the year, there have been ups and downs, but Tesla's stock has risen 63% in the previous year, trading at over $1,000 per share and a market capitalization of over $1 trillion. Analysts and investors were following enthusiastic news that Tesla was laying the groundwork for its second stock split in 2 years. As a result of the news, Tesla's stock price increased by 7%. Investors are quite hopeful about the future, as the stock split allows more individuals to invest in the top electric vehicle company. Experts approve of this move and assert that it's definitely in the right direction. In a note to investors, Wedbush analyst Daniel Ives stated, "We consider Tesla's intention to initiate its second stock split in 2 years after the likes of Amazon, Google, and Apple as a sensible strategic move that will be a positive driver for shares moving forward." Tesla stock has an outperform rating from Ives, with a price target of $1,400. Tesla will significantly increase its manufacturing capability. Over the next 10 years, Musk hopes to produce 20 million electric automobiles, more than double the current output of other automotive giants. As a result, the company is constantly on a quest to increase its production capacity significantly. Now that Tesla is producing cars in Germany, it will compete in the electric vehicle market with 3 well-known German brands: Volkswagen Group, BMW, and Daimler AG's Mercedes-Benz division. Ives remarked, "This eliminates a big overhang on the stock over the past 3 months. Investors have found the red tape and headaches surrounding the delays and disputes setting up this flagship European factory frustrating to watch unfold, since many on Wall Street doubted Giga Berlin would ever open. But it did finally open, and the Berlin plant is apparently set to produce 500 cars per week, with production anticipated to increase to 1,000 cars per week by the end of April. Overall, there is a lot to anticipate from Tesla in the next decade and beyond. As the corporation makes headway on these fronts, its stock will grow even higher in the future. However, because much of the growth has already been priced in, the company may not yield the outsized gains it has in the prior few years. Regardless, we believe it's well positioned to outperform the market in the future years. How big do you think Tesla will become? Comment down below.